G'day, mate. Shall I throw a pip on the barbie for ya? Ripper. Me. Good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. Nice to meet you. How you doing? Been trading currencies a while. Guess what? I'm here to share. Open up my heart, have all my guts spill out on the table for you. Or maybe just the brains, but whatever. I'm here to help. I'm here to share. I want you to be a success. I want you to be a success sooner than later. But it takes time. It takes blood, sweat, and tears for years. So you might as well fall in love. Right? I think you need to fall in love with what you do. Therefore, it's not a burden. It's a reward. I do these sessions 7:30 a.m. Monday through Friday here at Forex.Today. Namaste, Forex.Today. Happy New Year. Everybody enjoying Diwali? Yeah, wonderful. I hope you've had plenty of time to spend with friends and family, loved ones, and that crazy neighbor next door that bothers you. So anyways, hey, let's get going. Let's do some currency trading. Let's do some technical and fundamental analysis. What do you stink? Smell like a plant? Okay. All right. Are we there? I think we got your colors. This is. I feel like we need another song. Life is great, life is grand, life is good, life is beautiful. Oh, gonna get what you give, so give it all you got. Gonna give it all you got, gonna get what you give. Something like that. All right, so this is the Aussie yen. We are now in what, week 4 or 3 of this trade setup? I get it? Bottom, 618 Fibonacci retracement, monthly M2. Right? Then a high. Then I said, hey, guess what? It'll probably make a low at the roll reversal. Then I made another high, and I said, hey, guess what? It'll probably make a retracement back to the roll reversal. I think we did it here, though, didn't we? It hadn't come back yet, I think. Am I right? Am I right on that? We did this up here, right? And then we drew that, so on and so forth. Yeah, it hadn't happened yet because we had talked about, like, why did you miss this one? And then that, and so we did that one. Whatever. And we're supposed to be on our way to this level here, which is a challenge, sort of, I don't know, reverse fib-wise or something. And of course, just for the sake of thoroughness, the simple pattern is this. Oh, I know why I drew it. Reverse fib. It was a reverse fib. If there are bears in the market, that's their 618. Does that make sense? So if you were a bull, let's say you'd buy a 618 Fibonacci retracement. Well, with that same logic, then, if you were there, you would sell the 618 retracement of this move, right? So how do you know which one? It's a very, very easy thing to answer. How do you know whether you should buy the 618 on the bottom or sell the 618 on the top? Oh, you totally do. I wouldn't do both, but I suppose you could. You're biased. Thank you, Robert. You're either a bull or a bear. The rest is easy. If you haven't made the decision, it must be very, very complicated because you don't know what's going on. And if you don't know what's going on, you don't know how to manage your risk, you don't know how to behave, you don't know your entries and exits, and it must be really, really frustrating to not have this. But anyway, so we have to ask ourselves, is that going to be weak resistance or strong resistance? And I would have to say it's going to be strong. So I would still expect a decent dippy do, even if I'm a bull, you know, which is scary because that makes 100% reversal here, which means there's some sort of consolidation, blah, 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 blah. And of course, I'm also rolling the dice that we'll get some sort of volume pickup based on seasonality, but nobody knows that, right? You got to rub Buddha's belly 3 or 4 times to get that. Ah, babe. Or as they say in America, Abe. Old Abe. Mm-hmm. Hey, I had some haggis this weekend. That was good. Went back, got a second helping. I'm Scottish. No, I should have. So, anyways. Oh, I had barbecued pork, but smoked with peat instead of charcoal. That was all right. So, anyways, moveon.com. Life is beautiful. Ooh, boop, boop, boop. No, too far out. Okay. So what in the world is going on here? All kinds of weird lines, huh? Well, you can see we're playing this over here. Resistance, support, 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 support. Breakout, pull back down. Right? The micro move you can see. Breakout, pull back down. And then the macro pullback. Breakout, pull back down. And I think one of the things we were talking about is above this level here, you're certainly not bearish anymore. You may not be bullish, but you're not bearish. But this is sort of the kill switch for bull from bearishness. Special setting? No, I don't think so. Indicator list. Oh, it's probably because I have two different pivot point indicators, and I'm overlapping one on top of the other. That's what it is. Yeah, this black one, yes, it's a monthly monthly central pivot point. Okay. Down here is monthly S1. So what's the short end of this long story? You're not bullish on euro dollar, technically. Okay. And so at best it's bearish, but it's sort of lower low consolidation, really, right? So let's get in there a little closer. You might have bought it at the open. That's fine. It didn't work out. Well, that's fine too. You had the opportunity to make money, right? Imagine going through life with no opportunity to make money. Isn't the opportunity half the reward? Ryan saying, hey, how about some euro strength into the ECB meeting? Well, okay. So in that case, you got to pick your lines, right? Where's your support? Well, you lost your WM2, which sucks. So now you got like 17 down at the bottom. Yeah, all right. So if it collapses on Monday slash European Tuesday morning, yeah, then you can pick it up down here, but then it's a counter trend move. I don't know if you want a counter trend move, but that's what you end up having. Okay, so to draw that for others is that if you're down here early in the week, you're out of position. So any bear that sold here and here, they should, if they know what they're doing, exit here without question. Which then, if they exit their shorts, their brokers insert long positions into the market, and then you start getting this kind of stuff. Okay, and if the ECB says something interesting, it would be like, okay. So that's a blending, a synthetic blend of technical and fundamental analysis. Sure, by all means. There's a reasonable chance that this holds on this time frame. It's only a 30-minute chart. This feels like this. Most likely it'll do like that. Because, but anyways. I'm just going to move this, and you see that that ends up being a play of this. Gee whiz, it won't move. Move this, no problem. All right. Life is great, life is grand, life is good. It's pretty close, right? Anyways. See, remember the steps. You form a bias using technical and fundamental analysis. Sorry for being too casual. You develop a bias using technical and fundamental analysis, and then you confirm whether the market agrees. Okay. So if you're a bull, you buy at support. That's pretty easy. If you're a bear, you sell at resistance. That's pretty easy. If you're a bull and the market is rising, you buy and hold. If you are a bull but the market is falling, you buy at support and you jam your stop. And vice versa, versa, versa. Okay, kitty cat. Let's go to what, a 30-minute. Okay. I believe this X is a target. Seems like we're right in there, huh? Let me get further back here. That's bad news bears for bulls. Look at that. I wonder if this is almost like an odd man out. Looks like it shouldn't even be there. So we had the up move, consolidation, and it decided to break to the upside. Nothing you can do about that. We knew on Friday, though, that there was going to be a lot of Canadian news, right? But we knew. We talked about it on Monday, the previous Monday. What we didn't know is up or down. So you want some Blue Mountain coffee? $100 a pound. It's nice. I think it should be pressed. I dripped this one just out of time and necessity, but I think maybe it should be pressed. Dunkin' Donuts. Huh? Anybody know they're in Blue Mountain coffee? Jamaica? It's nice. It looks different than regular coffee. See? Yeah. Hemeken. Hemeken. How you say Hemeken? No, yeah. Kona is another one that I like, but you got to get 100%, and that's not an easy thing to do. And if you buy a bag that says it's 100% Kona, they're lying. Kona coffee is nice though. All right. Yeah. Okay. Oil. Oil's supposed to go up. So what was this nonsense on Friday? Right. Well, the CPI out of Canada. But it looks like we got our groove back on. Now, our analysis told us the pullback should have been to about 51.50-ish, but it fell to 51. All right. Note to self. Big round numbers are more important to oil traders than midpoint psychs. Got it. Okay, so Sam asked a really good question. I don't think I'm going to dive into it because that can get to be a 3-hour speech. Not, but let's make an interesting point. Fundamentals and even technicals, when it comes to currencies, you have to evaluate two assets. Okay, so for example, oil. What are the two assets when I say, help me value oil? Oil and USD. Thank you. So when we're doing fundamental analysis and sort of valuation projections for the ECB and the Fed, we have to individually look at their policies and the cycle of their policies, and then make those two cycles relative to each other. So very often what you see in the textbooks, they say things like, well, the Fed's raising interest rates, US dollar strong. And euro not raising interest rates, so euro weak. But that's only partially true. Okay? It's where they are in the cycle. So if the Fed has been raising interest rates for a while, but the euro is just starting, the euro would probably be strong relative to the dollar because money wants to flow there. There's another scenario where assets in the United States are very, very, very expensive. We've had conversations about this in the past. Like, why didn't you buy Bank of America at $5? I talked about it for weeks, and then I bought it, and I told everybody I bought it. Hey, I bought Bank of America shares at $5. Delta Airlines, the largest airline in the world. Why didn't you buy that at $5? I mean, like, why not? Right? Why not? So, so on and so forth, right? So now these stocks are, 50, $60, or I don't know about those ones in particular, but a lot of things have gone up 1,000%. Real estate's going up and so on and so forth, and valuations of companies. Let's say you wanted to buy a company. Well, even that is getting expensive, right? So, long story short, Europe is just much of the risk is mitigated. So 3 years ago, Europe was really hurting as an economy. It was really hurting, and we're past that, by and large, because they got away from their socialist pig dog German policies of starving people to death as an economic policy. To suddenly, like, hey, quantitative easing came in and won the day. So again, it's von Hayek versus Keynes, right? Keynes versus von Hayek. So anyways, Europe spent their way out of their problems, and they're better off for it. You can see it. Okay? So the worst is over in Europe, we think. They don't need extraordinary accommodative policies like quantitative easing. Quantitative easing is designed to weaken the euro, aka increase inflation. So with the removal of quantitative easing, then there's less weakness. You got that, Sam? I think it was Sam that asked the question. Sambo, Samarama, Sammy, Samantha. The Draghi doesn't want to keep a high euro. And it's hard. Yeah, well, have they or have they not announced a taper in the amount of quantitative easing? Okay. Yeah. When there is less weakening, how else could you describe less weakening? Now, Ryan, don't be hurtful. What do you mean read the meeting minutes? That what about economic growth, economic schmeconomic? It's about money. It's about people getting filthy, stinking rich. Oh, but what about the poor people? Yeah, no, it's about getting filthy, stinking rich. So less quantitative easing means less weakening, which to me, you could just change the language and say more strengthening. Less weakening means less down. So like you jump out of an airplane. How fast are you moving in the first 2 seconds? Right? And how fast are you moving 2 seconds before you hit the ground? Right. So less quantitative easing announced by the ECB is sort of like someone pulling a parachute. You're still falling, but a hell of a lot more slowly. Yeah. But in the world of economics, or let's say it's really finance and investing, that means you're going to have a safe landing. You're not going to die. You're Your legs aren't going to be broken, right? You're not going to be a stain on the Autobahn. Well, you might be depending on where you land, but it seems like it's going to be a safe landing. Like the worst is over, that this is not going to end in death and destruction. So time to start buying. It's time to start investing. The end of the world isn't near. The end of the world was very likely when you jumped out of the airplane. But the risk of you dying decreased significantly when the parachute opened. Yeah, no, I'm sorry, Mike, because we can then get into it and stuff, like just, so compare the two. Right, like Ryan said, read the damn meeting minutes. Yeah. All right. So, yeah. I mean, again, if you were a billionaire and you wanted to buy some assets, you look at America and you're like, ooh, nice assets. It's kind of pricey, right? And then you say, well, what can I get for $2? Eastern Europe. Yeah. Yeah. Are you talking like Russian? Are you talking Polish? No, we're talking Romanian. All right. So, Freddy boy, when do you post these meetings on YouTube? Yeah, it's on YouTube and it's on Forex.Today. They always there. Well said, Ryan. Okay. Yeah, they good. All right. Stupid gold. Dang, did we get one wrong? Golly gee whiz, that's embarrassing. Son of a. It looked like it was going to work. Gold down. Dollar up. All right. Is that how we're going to play it? But things have changed over the last a little bit, and that's what happens, right? I don't mind strong dollar. I prefer weak dollar on the long term. Okay. I like weak dollar because it means Americans are filthy, stinking rich. So, by filthy, stinking rich, I mean one guy out of 100 million has a lot of money and everyone else is poor. That's okay though. Yeah, no, it's okay because everyone wants to sit around and talk football. Hey, you see the Seahawks? My boy's got a wicked arm. I'm like, you have a boy? You have a boy playing for the Seahawks? No. He's my favorite quarterback, and he's your boy? That's weird. Well, my boy Bernanke retired, so my girl yelling and screaming. She's got wicked arms too. How about them Knicks? So it's funny. Like we have and I'm sure it's global, right? I mean, I'm not picking on Americans, but we have our attitudes, or let's say our focus on all the right things. Like Men want to talk football. Women want to talk about Bachelor, Bachelorette, Bachelor in Paradise. And I'm like, well, why don't you get your financial house in order? You're like, oh, well, the rich guy over there, he does all that. But I'm going to watch Bachelorette religiously. I'm like, okay, to each his own. And that's where we live. But they don't have time. They're so busy. I'm like, all right, well, I got to go to school. I got a midterm. I got to do some studying. I got problem sets due. I got to go to a section. I'm sorry. I got to go. I got a section. All right. Cool. So anyways, gold coming down. Shoot. But we know there's some pretty big support down in here. Right. A 786 off the S1 is just less ideal. So might as well let it fall and try to maybe catch a double bottom. But, you know, generally over the last bajillion years, how many years has it been now that I've been generally a bear on gold? Trying to go back even further than this. So, yeah, I guess 2 years ago, it bottomed out. But this whole time I was really a bear. And for those who were with me back in these days, lots of people are supremely interested in gold, right? I used to get people just going ape crazy on me about why not buy gold? Buy gold. We should be buying gold. Buy gold. And we had this conversation where, you know, people are interested in yield, right? The world wasn't ending. The financial world wasn't ending in 2014. It was ending in 2007. So I had this big conversation about yield. And it came down, I think, didn't I say somewhere between 1,000 and 1,100? And it came down to 1050. But I had guessed that way up here. I'm like, I don't know. I said, you know, people are going to defend 1,000. Nobody wants it below 1,000, right? So they're going to start defending it above that. So I don't know, somewhere between 1,100 and 1,000 was my guess. That's literally the logic. No other way. And there. So, anyways, higher high, higher low, whatever you wanted. But we're at the same price as 2013, maybe even 2012. So that's 5 years. It's so funny because that seems like nothing to me. I was there every candle. 5 years ago, gold was the same price. How does that make you feel? My house has gone up by 50%. Gold hasn't changed value at all. And now if you're holding physical gold, we have something called a carrying cost. It's sitting in a vault. You have to pay storage fees. So you're losing money is what I'm saying. Yeah, vault. I don't know what a vault costs, Brian. Yeah, and the guards and security system. Yeah. Everyone has long fingernails at the at the gold place, right? Oh, do I have some gold under my fingernails? Oh. No, I don't hold physical anything except a house, I guess. That's a physical asset. Yeah, but they don't tend to last very long. So, anyways, whatever. I got this. You can't even see it. Too much reflection. All right, so we're done with gold. Gold, oil, we've done. I mean, I don't don't think we spent much time on oil. I think we got a question or something. But check that out. This is a sell. You know that. You should know that. Because you love how the analysis takes like a bajillionth of a second. You're like, well, you already know that's a sell, right? So there's your resistance, and there's your sell pivot. So that's without question a sell zone. But if you're a bear, you already sold it, so we don't even need to discuss that. So now, if you're a bull, what are we looking at? Well, I drew this 3 weeks ago, so it still might be valid. Trying to get this out of the way. There we go. Right? So wouldn't it be awesome if we got something like this? Wouldn't that be great? Yeah, I like it because it's ceramic. I just never had a ceramic watch before. I'm like, oh, that makes sense. It doesn't vibrate. Like a metal vibrates, ceramic doesn't vibrate. So I'm like, oh, that's cool. Okay. Yeah, and I've tested that a few times. I think I'll put the leather band back on though. Things to do. All right. So anyway, so there's your buy zone. There's your bull. I think we got to be pretty careful because weren't we on our way to 55? But the bottom was supposed to be 45. But it's so I don't know. So anyways, we're on our way to 55, but we're pretty gosh darn close, right? I mean, this is still likely to act as resistance. So I'm still sort of worried about this R1, but you can see it pop above R1 and then pop back pretty quickly. So, it's a bit of a take a break, take a breather. This seems like a long October though, doesn't it? I don't remember October feeling this long. I've had some pretty spectacular, spectacular Octobers. I would say this is less spectacular than hoped. But there are definitely, I mean, look, if you bought oil, for example, in the beginning of October, I don't know if I was saying September there, I meant October. But anyways, if you had bought low in October at, what is that, 48.50? What is it? It moved $5, $4. Then that one trade is worth $4 grand with some potential to go higher. I mean, I don't know. Just depends on what you're doing, I suppose. But it just hasn't been as correlated as I would have liked. What? So is it Trump? Is it North Koreans? The Russians hacked somebody, I'm sure, but it's less. It's less exciting as I would have hoped. But sometimes that's a good thing because maybe if you want more exciting, your parachute only opens halfway. That would be exciting. But you may not want that, right? You may not want that. So maybe this is a blessing in disguise. You can't really get all upset. And Pigger Dogger. Pigger Dogger. Pigger Dogger. Piggy, pig, piggy, can't you see? Sometimes your pips just hypnotize me. And I just love you. All right. Yeah, right, Marina. Yeah, a trick will be good. It's amazing how our human psychology falls for such things, though, isn't it? Where you're like, yeah, I want to be a professional. I want to make money. I want to have a skill I can do my whole life. Oh, this guy's selling me a trick. I'll try the trick. But that's been going on in humanity for forever, right? Yeah, but it's marketable, but it's just in all kinds of things, right? Oh well, yeah. So here's, I mean, it's not a hard thing to do. You so he pays what, a tenth of a penny every time you see that, fine. But what he can do is get people to sign up for stuff. So you give him the email address, and then a certain percentage of those guys, he could sell something for like $10. Also, I don't know what it is. I don't know what it is, but let's say he wants to sell you something for $10. But you've already seen a video and everything. You're like, oh man, this London breakout. He's right. I could be a billionaire. Great. Pay $10 and you get something. Great. So now he's got the $10. The $10 pays for like 100,000 impressions. So if he could sell you, get you very excited, not him, just everybody, right? And get you very excited. At the very least, the suckers that pay the $10 pay for all the marketing, but then he's going to get, let's say there's 10 for every 10 people that give him the email address, one person signs up and pays the $10. But now you got all these email addresses. See what I mean? And he got it for free because the suckers for paying for the flash sale, $10, is paying for all the marketing on YouTube. Meanwhile, they're going to have a huge database of email addresses. So I don't know, whatever. So look, down, 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 up, up. We covered this. If you were a bear, that's an irresistible sell zone, monthly central pivot, blah, blah, M3. So you were supposed to sell this last Monday, and we hypothesized that based on that resistance zone that this would actually head down to here. It didn't make it. It didn't get down there. So it's slow. Should we bail on the trade is the next question. Are you still a bear? Should you be a bull? And, well, it hasn't made a higher high yet. And this is a sell zone. Oh, no, sorry. Where we are now this is a sell zone in a consolidated fashion because this high is so close to that, right? But it's not bullish. Right? This says it's ready for a fall. This says you should be selling. This is the resistance. This is the trend. So it should be okay, but it may not be. So we're open-minded, like, look at that cluster of support. Ugh. Monthly M2, weekly M2, you thought we were going to tiptoe through that without a challenge? Come on, Burr. Come on, Burr. Even if you're a bear, you should understand that that's where you'll be challenged. But you should be fine. I don't know. Right? I don't know, but we should be fine. We should be fine. Up here, freak out. Freak out. Freak out. Right? Yeah, that's freak out up there. Right here, you chill. Right? That's where you're biggie, just sitting back, sitting in your chair, just chilling out. Birthdays were the worst days. Now drink champagne when I'm thirsty. Yeah, what's that other line he says I really like about something about no heat, living in the projects, no heat, wondering why Christmas missed us. So little Kiwi what? Kiwi buck, Kiwi yen, what do you want to do? Give me some Kiwi. Okay. Well, first of all, you'd have to look at that. That's Aussie. Okay. And then you would want to go bump, 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 bump. All right. What's the question? I'm running out of time. I might have to bail. 8:25, pretty close. What's the question? Yeah, well, Daniel's a bull. That makes sense to me. It's hard on this currency under, the economic conditions, but it's sort of irrelevant if you're a portfolio manager. So just, again, imagine you work for me, and today's your first day, and you walk through the office, and I say, oh, by the way, you're joining the Kiwi team. You're on the bull team, right? So you're bullish Kiwi, just predefined. We already have a Swissy guy, we already have a dollar guy, so on and so forth. But our yen gal retired. She's done. Bought herself a yacht, right? So she has young, athletic men on her yacht in tiny little Speedos swimming through the water. She's up drinking champagne. Yeah. And so anyways, she's done, and it's your job now. So you don't even have the capability of making a bias, because there's already a Kiwi yen short dude. There's already Kiwi yen or Kiwi Swissy short dude. There's a Kiwi Swissy yen, Kiwi Swissy long dude. You see what I mean? Like, there's already everyone doing their job. So we're in effect hedging. We're in effect a hedge fund, right? So anyways, you are, or let's say Daniel now, if we're going to put a name to it. Daniel has been hired. I'm walking Daniel to his desk, and I'm like, all right, well, you're Kiwi yen long. Good luck. And it's sort of, that's your job, right? If you can't set your own bias, then someone else does, right? And so Daniel's job then would be to simply find support, buy long only trades, and manage the stop. I mean, how hard could that be? Where's the support? Is there support here? No. I mean, I guess you could have off the off the moving averages, great, but then you got knocked out. But that's why you manage your risk. You might have bought back here last week. It's less ideal, it's not good, and you would have got knocked out, but you would have had a week and a half of profit. Great, right? I mean, so you're just picking your lines. So there's some support here. You can see it spiked down, immediately went up, right? Gap down and immediately went up. That's cool. Okay. So this is the buy, by the way. This is what you would want. This is what you would hope for. This is what you'd pray for. And just behind your weekly swing long is the monthly support. I mean, right? What more would you want if you were a bull? Now, do we know if the bulls are right? No. Do we know if bulls are wrong? No. The only reason, fundamentally, let's say, to buy this would be the yield differential is high. Remember, New Zealand pays the most, right? So if you bought a textbook, wouldn't they tell you that the New Zealand dollar would be the strongest currency in the world, right? That's what you were probably taught somewhere else. That's probably what you read in a book, right? You bought Kathy Lean's book, and she's like, yeah, well, Kiwi would be the strongest currency in the world. Look at the yield differential. Well, but is that true? By the way, I don't know if Kathy Lean's book says anything like that. I'm just saying, right? But it's not true, is it? But how many people have been taught that from some source, some reputable or even moderately reputable source, that that's a fact? That's how the currency markets work. New Zealand pays the highest, so it will be the strongest. Yen pays nothing, it will be the lowest, and therefore, just based on simple factual financial physics, this would be up. Right? I mean, just that would be a fact based on the laws of nature. Kiwi yen would be straight up like a rocket for years and years and years. Too bad it ain't true. Sort of like the CAP-M model, that a stock should be, the expected value of a stock is the future value of all dividend payments. Well, you need the risk-free rate of return. You need the market beta. You're like, oh my God. Is this what Harvard teaches? What a bunch of idiots. See, my problem is I go to school, I'm like, oh my God, I need a better school. But unfortunately, there isn't one. And what do? You're like, I'm at Harvard and I totally disagree with the professors. Where am I going to go? Pluto? The University of Pluto? I heard they're smart up there. Oh my gosh, right? I'm just a farm boy from Saskatchewan. What the hell do I know? But anyways, so yeah, guess what? I actually got a really bad grade one time over arguing with the professor about things like, if the dollar's strong, gold will be weak. I got marked wrong for that. I'm like, so I actually challenged the professor on this one, and well, let's just say I lost. I'm like, well, what do you mean? Oh, well, if the dollar's strong, all assets will go up. Well, what do you mean? Oh, well, he's shifting the demand curve. I'm like, what are you talking about, bro? Yeah, no. If the value of the dollar goes up, demand for everything will go up. It'll shift the curve. Blah, 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 blah. So you're wrong. Dollar goes up, gold goes up. Everybody knows that. And I'm like, so I rated him bad, and I got my B+ in the class or something. Merde. Anyways, serious. So be careful who you learn from. Nobody loves you like me. I love you more than your mother. Well, I love you more than your stepmother. Let's put it that way. since she's your sister's age. Yeah, all right. So Kiwi, yeah. Kiwi dollar maybe? We'll take a look. You know, I was supposed to cut the short today, guys. Golly, son of a. All right. But you're my sweet baby. Look at this breakdown. Nice. Good call. So we're through the monthlies and everything. Look at this breakdown. That's why we have the pitchfork there. I got a pitchfork going. Oh, snap. Look at that. That's ridiculous. Look at the macro retracement. Look at that. Look at this macro retracement for a sell side. Damn. I wasn't on that. Damn. Look at that. I mean, that's free. That's free money right there. Honestly, like that is free. I mean, what else would you want? Well, I don't know. A full-on retracement back to resistance. I don't know. Sell at the monthly pivot point. I don't know. With a cluster. Look at that. How it actually opened on this weekly swing sell. See that? Oh, now I'm bumming out, man. I realized I didn't even. I left my parachute in the airplane. Like, damn it! Look at that. This is the weekly M3. Oh my God. Oh my God. Right? This is where you're walking by the bank and the ATM's broken and it's actually spitting money out at you. It's just money is spitting out of this ATM machine. You're like, yeah, but I gotta go watch Bachelor in Paradise. And you keep walking. I don't have time for that. Bachelor in Paradise is starting. So anyways, I got to roll, yo. Will you guys be here tomorrow? I would like you to be. I will be here tomorrow. $100 lament. Cool. Well, thank you for being on my team. Thank you for choosing TradersWay as your broker. Yeah, the music's pretty good though, right, Fred? Yeah. So, peace on earth. May the pips be with you. May our profits be above average, and reach out and do something nice for someone nearby. Cool. See you tomorrow. Thanks, everybody. Cheers.